Africa. Then I was in Cape Town for about 2 weeks, but then this virus situation came, and I flew to Durban and got locked down there for 3 weeks. And now I was able to escape, and I'm in Munich. So in some ways, I've been forced to spend more time in each of these countries. Usually, I don't spend more than a week in one place.
So how many days on an average did you travel, or do you travel?
I would say at least 200 days of the year. Yeah.
200 days of the year. And how are you managing it? I mean, you're not used to staying in one place in one room. How are you managing this?
I'm going absolutely crazy. And the reason why I was so happy to escape from Durban in South Africa is because there the lockdown was very severe. They wouldn't allow us to even walk on the streets. Whereas here in Munich, I can get out, I can get on a bicycle and cycle. It's much freer, but of course they have precautions of distance and wearing the mask in indoor places and so forth. But it's much, much better.
Are things getting much better in Europe because you're there, you are walking on the street, like you said, you're wearing a mask? In India, when we read the news, we tend to understand that the virus is very largely at play, especially in Europe. What's happened in Italy has got extended to Spain. What's happening in Spain is getting extended in Germany and in Switzerland. How difficult is the ground activity and the economic activity in Europe?
Oh, I think it's very difficult. Europe is, despite the fact that Germany is opening up more, but the situation in Europe is still quite dire, and I think it'll take time. But you must remember that the cases are beginning to level off, and I believe there's been a buildup of natural immunity taking place globally. So even those countries that have not had a lockdown will go through a period of cases rising, but then flatten out as people get immunity.
Mark, as we speak, there are 4 factors at play: a medical crisis, a sell-off in crude, which we've never seen in modern world, unprecedented action from central bank, which has never happened before, and then a huge rise in VIX. These 4 factors have never come together.
Yeah.
Right. So how does one judge what is coming next? I was looking at NASDAQ last night. Can you believe it, Mark? NASDAQ is in the green.
Yes, exactly. Well, I saw it a wonderful opportunity, frankly, when I was in South Africa and the market was tanking, and I saw some of the valuations of really great stocks. I started buying, but then I said, look, let's not put all the money in. Let's reserve some for an eventual downturn again. And as you know, in these bear markets, you get false starts and they come down again. But I saw it as a great opportunity. And for our funds, what we're doing is switching to real better quality stocks, which we couldn't buy previously because the prices were too high. So it's a great opportunity to switch. And I think also it's a particularly great time for emerging markets. Of course, the downturn in oil prices is wonderful for emerging markets for the most part. A few countries like Nigeria suffer, but India, China, and so forth are all big importers of oil. So this is very, very good for these emerging markets. But the other thing is that, the old saying, you should never let a crisis go to waste. And the wonderful opportunity we have now is to begin these and accelerate the reforms that were started before the crisis. So in India, for example, I think Modi has the opportunity now to push through various reforms, which would have been politically difficult previously, and now can do that. A good example is South Africa, where Ramaphosa, the president, asked all of the South African airline staff to resign. And of course, as you know, that airline was losing money for a number of years and a big drain on the budget. So it's the kind of thing that governments can do to improve the overall long-term environment, which I think is going to be very helpful.
Okay. Mark, given that we could see at least 1/4 of the global GDP contracting, and it is going to be life to become normal could be a function of 6, 12, 18, or 24 months. What explains this recovery in markets? And do you think the gains what we've seen in the month of April, especially in developed markets, are they here to stay? Can markets sustain gains at these levels?
I think again, you have to look at specific markets and specific companies, but in a number of cases, yes, these recoveries will be sustained, particularly those companies that are benefiting from the downturn. I mean, if you take companies that doing conferencing work, companies involved in the cloud, which is now overwhelmed with the need for capacity, these companies will do quite well. As I said, there's always going to be corrections along the way, but I do believe we're at the cusp of another bull market going forward. And I think the market and the market participants are beginning to realize that this COVID-19 is curable. In other words, they're coming up with cures. Various medicines are beginning to work, and the vaccine will eventually come into play. And as I said, the natural immunization, the mass immunization, is taking place as we speak. So I think that's what the market is taking into consideration. And by the way, the other aspect, of course, is the incredible liquidity that's being poured into the global economies, not only at the individual country level, but at the international level. What the IMF, IFC, and all these international organizations are doing to feed liquidity into these markets is another reason why you've got to really think about equity so that you're in an asset that's going to be moving with the rise in inflation.
Okay, before I start taking some questions from the chat, I just want to establish some data points for the benefit of our viewers. And our research team has done some brilliant analysis. Let's first look at the MSCI chart, the MSCI Emerging Market Index, as to how that MSCI Emerging Market Index has done and moved in the last couple of months and last couple of years. Then we'll compare India with other emerging markets. Now, these are two important indicators which will tell you what India is doing, where India stands right now, where India is positioned in terms of relative and also in terms of absolute basis. Just bear with me, those data points will just come up on the screen as to what the India performance with other emerging markets is and where do we stand in terms of the YTD performance. So Mark, the question which I think is a consensus question in the chat window is that what are the chances that global markets and Indian markets could retest the March lows?
There is a chance of that happening, but I doubt if they would go below the lowest point that we witnessed. I don't think that will happen, but there will be corrections along the way, no question about that. I think one of the reasons for this would be as the earnings numbers come in at the end of this year or from here to the end of the year, people will begin to say, oh God, I didn't realize the earnings downturn would be as bad as this. And then they will say, okay, I bought some at the bottom. I think I better get out now and take my profits. So you're going to see that kind of correction coming along. But I do believe we've already witnessed the bottom. By the way, one of the reasons for my trepidation is that I've just done a study of all the past bear markets in emerging markets and developed markets since 1987. And the average downturn, by the way, in all these markets was about 50% in dollar terms. And as you can see, we have not reached that. We have not gone now that far. So you always have to keep some powder dry in case history repeats itself.
So you are not going to be, you will not stick your neck out literally and say that the worst is behind us. Despite the positive factors which you alluded to on the medical front, on the economy front, you still feel that a retest of March lows cannot be ruled out.
I don't think the March lows can be repeated, but I think we could have pretty big correction. Don't forget, in some of these places, the market has gone up by almost 20% or a little bit more than 20%. We define a bull market as a 20% rise. So in some cases, you might say, oh, we're in another bull market. But that's quite a big correction on the upside. So given that, I think we can have the same kind of correction on the downside.
Okay. Mark, let's talk about, we at ET Now are saying that, look, just like we followed AC and BC and AD, let's now talk about the pre-COVID world and the post-COVID world. To your mind, in the post-COVID world, what are the changes which you think for portfolio investors are going to be permanent changes? What do you think they should buy irrespective of valuations, because that's where the puck will move and that's where earnings are? And what do you think they should not buy irrespective of how attractive the valuations are?
Well, number one, they have to be involved in equities and in global equities. Of course, in both developed and emerging markets. I think equities are very, very important at this stage because of the incredible printing presses that are working overtime globally. So you have to be in equities, which will adjust to these changes in currency movements and the devaluation of currencies, let's put it that way. So that's number one. The other thing is, I've always said, you've got to have some gold, at least 10% of your portfolio, because I don't have to tell Indians that they've got plenty of gold, so that's not a problem in India. And I think you just got to be very, very cautious on the fixed income arena, because with these very low interest rates, a lot of bonds, a lot of fixed income instruments are being bought for no good reason. In other words, you're getting to a situation where you're being forced, the bond investor being forced into very leery looking bonds. So I think you've got to be careful on that front. There are some opportunities, but you've got to be very, very careful. So again, with this situation, equities are going to be the winner at the end of the day.
Mark, it's unfortunate but true, but the firm which you represented, Franklin Templeton, in India, they were forced to close some debt funds because of liquidity crisis. Do you think we could be in for a 2008 kind of a scenario in making, because cash flows are difficult? In terms of NPAs, it will go higher and delinquencies will also move higher. So what may look like a medical crisis, do you think may end up becoming a liquidity stroke credit crisis by the time things blow up and by the time we progress?
We already are in such a crisis. The difference between the financial crisis we had previously was that the banks were the problems. Now the banks are the solutions. In other words, when I talk about banks, I talk about central banks, multilateral banks, as well as local banks. Now we're in a situation of a liquidity crisis. There's no question about that. Many companies will go bankrupt if they're not given assistance. So the good news this time around is that governments, multilateral institutions are reacting before the crisis gets too bad and are refunding a lot of these institutions. And of course, in turn, the local banks are refunding the companies that have financial difficulties. So it's quite a different situation than we had during the financial crisis.
Mark, in your current avatar where you're managing portfolios actively for clients, what is your India weightage? And given the fact that India is going to be a double beneficiary of falling crude and the fact that on the medical front news so far is good, does India deserve to be an overweight position? Because so far India is actually underperforming emerging markets.
Yeah, well, we still have second largest holding in our portfolio in India. Depending on the day you're looking at, it could be either second or third after China. So we still have a commitment, overweight commitment to India. And we think longer term, there's still going to be great opportunities in India. And as I said, with this crisis, hopefully Modi will be able to take advantage to implement some additional changes in terms of reforms. The other thing I think is going to be very important going forward is the implementation of big infrastructure projects in order to get people back to work, because the big challenge that we face is the rise of unemployment. And a lot of this, of course, is temporary, but a significant amount is going to be permanent, where companies have let people go and are not rehiring, or companies have gone bankrupt and therefore will not be hiring. So the need now, and by the way, I hope the multilateral institutions step up to the plate on this, is to have a massive employment scheme whereby you have large infrastructure projects accelerated to put people back to work. I think that's going to be very, very critical going forward. It reminds me a lot about the New Deal that was implemented by Franklin Delano Roosevelt during the Depression in America. That really helped a lot. And it built infrastructure in America, which still stands today and is a testament to incredible government action.
Okay, now I'm just going to establish some facts for the benefit of those who are online and those who are watching on different platforms, is that each time whenever we've seen crisis in the world, the shape of the economy changes. Now, post-plague, we know that industrial revolution started in Europe. Post-World War, we know that big amount of construction activity started in Europe. It is broadly believed that post-SARS, the Chinese internet shopping culture started. So the Alibabas and the other companies post the SARS episode only, they actually saw a huge uptick in their business, and those business models suddenly gained a lot of traction because people wanted to travel less, they wanted to communicate less. As a result, the internet shopping boom really started. So Mark, in the light of the fact that each crisis gives an opportunity, it is not the strongest species which normally adapts. It survives. It is normally the most adaptable species which survives. Where do you think things would change in terms of consumption, in terms of behavior, and in terms of scope of earnings?
Well, there's no question that with this crisis, we've all learned how to operate on the internet. I mean, I myself have learned so much more in just sitting in this hotel room and scanning the internet opportunities in terms of information availability, et cetera, et cetera. And of course, that means my behavior is going to change. Of course, I'll continue to travel, but I'm going to be using this form of communication, either a Zoom or any other communication form, teleconferencing, and also the use of the internet a lot more than ever before. So I think this is going to be a very permanent change. Internet shopping, of course, will continue to increase. Don't forget, before this crisis, internet shopping was increasing anyway, but now it will probably increase more and will continue a very high growth rate. Nevertheless, I do believe that even with this situation, this change in behavior, people will still want to travel. They will still want to meet with people. They will still want to go to restaurants and socialize. So after this is over, I think you're going to see a return to this kind of behavior. And the other thing is, don't forget, as a result of this coronavirus crisis, although people talk about, countries becoming more isolated and the lack of cooperation, et cetera, the reality is that the communication globally has been increasing, and cooperation between countries has actually been increasing at the scientific level, at the medical level, and so forth. And that's not going to go away. I think global cooperation will probably increase going forward.
Okay. Mark, while all of us are crying that we need a barber and we need a haircut, I'm not the happiest one on the street.
I do one myself.
A question on the chat window is coming from Mikey23 that says, sign in name, welcome to the webinar. Thank you for your question. The question is, Mark, why is the dollar going higher? US is stimulating their economy more. They're printing more dollars. I mean, the only thing which is working 24/7 in America right now is the printing press. And yet world still wants to align with dollar. Why is there this strength in dollar?
Well, simply because the dollar is a place of stability for people. People know they can use the dollar anywhere in the world to buy things. That's very, very important. The liquidity of the dollar, the availability of the dollar, and the credibility of the dollar is very, very important. So if you're sitting on whether it be lira, whether it be yuan, Japanese yuan, or whatever, if you're wanting to do something globally, you need dollars. So the dollar is a haven in that sense. Now, of course, we all know that the U.S. is incredible in debt. There's an incredible debt in the U.S. economy. But we also know that the U.S. is subject to the rule of law. In other words, most people realize that they can get a fair shake in the courts in America if something goes wrong. So this is very, very important when we look at the global situation. So it's no surprise that people are seeking dollars and wanting dollars. And by the way, this dollar flow will increase because the multilateral institutions make their loans and grants, usually in dollars or in these sharing rights, but the sharing rights have a huge component of dollars in them. So I believe the use of dollars probably will increase for the time being.
Would you be long dollar for next 5 years?
I don't know about 5 years, but at least for the next year, yes, I would be long dollars, yes.
My next follow-up question, Mark, is that is there scope for cryptocurrencies to go higher now?
Yes, in these very narrow space of cryptocurrencies where the people using them are using them for a very important reason, in order to hide transactions, in order to do transactions that can be considered illicit. Yes, there will be increasing demand for the cryptocurrencies simply because more and more business is being done online, and therefore they need, if they don't have the alternative using the dollar or another currency, they will want to go to cryptocurrencies.
So Mark, hypothetically, you just have to make one trade for next 3 years and then move into a lockdown or in a secret room for next 3 years, but you're allowed to trade once in any asset class, and your time frame is 3 years. What will that trade be from Mark Mobius, where in 3 years he will not talk about that trade? He is happy to take a 15% or 20% volatility, but he feels that that is the ultimate trade for next 3 years, given how things are changing.
I would go into a company that has a global reach. In other words, their products are accepted globally. It could be a certain kind of food. It could be a certain kind of fashion item, whatever is going to be and continues to be and has the history of being globally acceptable and required and desired by people around the world. That company that has the internet reach, in other words, a company that traditionally has a product that is unassailable and acceptable, but also has the capability of selling on the internet. That's the kind of company I would want to be in.
Okay, I'm going to pick up a question from Deep Bhatia. Deep, welcome to the show. Thank you for a question. Mark, now what Deep wants to know, as mentioned by Mark, equity will be the winner over fixed income instruments. Which sector in Indian equity market do you feel you're comfortable investing right now?
In fixed income, would that be, or just equities?
Equities.
Oh, equities. Okay, good. In equities, I would feel very comfortable in those companies that have the serving the conferencing, video conferencing, and cloud computing capabilities. In other words, whether it be a software company or an engineering company that provides hardware for teleconferencing or for long distance communications, I think those are the companies that I would look at right now.
Mark, but again, a lot of questions are coming which are centered around one simple fact, that is what we've seen both locally and globally, almost a 20% rally from recent lows, 25 to 30% in specific stocks. Is this a bear market rally where if you don't get, or this is a genuine market bottom which is in making? We may not make a new high for next couple of years, Mark, but is the worst behind us, and is the market now a clear buy on every small decline also?
Yeah, you must remember that the bear market is over. Let's put it that way. We reached the bottom, in my view, but there will be corrections along the way. We will bounce along this bottom. But the important thing to remember, people to remember, is that let's say you go from 100 to 1, that's 100% decline, right? If you go from 1 to 2, that's 100% increase. So it's very, very important that you be buying at these low levels, provided, of course, you like the stocks, the valuation is there, and the stock is not going to go bankrupt. That's why balance sheets are very, very important now. You got to look at the balance sheets very carefully. But now is the time to be stocking up on these stocks, even if the prices come down again, because the valuations are now, and you can dollar cost average into these this market. You must remember, another thing we learned during our study of bear markets is they don't last more than 2 years. Usually it's about about a year and a half, year and 3/4 that these bear markets will last. And I'm talking about the distance from the top to the bottom, okay, when it's reaching on the bottom. So given that, we're already, at least a half year away. We got to give it maybe another half year before we really reach a situation where we're in another bull market. But you got to be careful because these bull markets creep up on you. And if you wait until the market reaches its previous high, you've missed out. You haven't had the opportunity to buy these cheap stocks.
So do you think the biggest risk in this market right now is not the market fall, but the risk of remaining underinvested?
Yes, I think a lot of people will be underinvested. They will keep in cash. They'll be afraid. The problem is that a lot of times they measure a bear market from the top of the bull to the top of the next bull market. And they said, oh, this bear market lasted this long. No, the bull market starts at the bottom of the bear market. So you've got to be very careful. That's the reason why our findings show that we're talking about a year and 3/4 roughly for this to happen.
Okay. We're almost the halfway mark. At this point in time, I would also encourage Mark to talk about his book. I must admit that I have a personal copy of that book and I really enjoy reading that book again and again. So Mark, this book of course was written before the crisis, but the essence of the book is that one should now start focusing on companies and countries and industries which will benefit because of the problems in the world, whether it's medical problem, whether it's insurance problem, or whether it is finding a solution. So let's look at that cover page once again. Invest for good, a healthier world and a wealthier you. So Mark, what is this book all about? Tell us, if for those who plan to read this book or those who want to understand from your experience, what is the sum and summary of this book?
Well, in that book, what we did is went into the history of our experiences in emerging markets. And at the end of the day, what we were trying to convey is the importance of the G, ESG, environmental, social governance. And what we tried to do is emphasize the governance aspect, because with good corporate governance, you will have companies that will behave better in terms of the environment and social aspects. But more importantly, particularly in this time, in this crisis, the companies will take care of their workers, they will take care of the community, and most important, they'll take care of their shareholders by ensuring a strong balance sheet and good financial practices. So I would say our book is quite important at this time. In other words, for investors, they should consider some of the points we made in this book.
Thank you. Okay, Mark, I'm going to move to the next leg of the chat, where I'm going to change topics and I'm going to just encourage if there are any questions on asset allocation or if there are any questions on gold. A lot of questions are coming on gold, Mark. So my question to you is that, do you think in this environment, gold should be at least 15 to 20% of one's portfolio?
I think there's no harm in going that high, but at this stage, with so many opportunities in the equity market, I would be more interested in seeing more into the equity rather than gold. So as I said, 10, 15%, fine. If you want to go higher, fine. But I would say you're better off looking at these bargains in the Indian market. Look at those companies with very strong balance sheets, hopefully no debt at all. Companies that have products that will continue to be required and desired, and companies with a very strong internet appreciation and internet capability.
Okay. I have a question coming from Vishal Pandit, who wants to know, can I get a copy of webinar on YouTube or email? Can I get an email? Okay, Vishal, thank you for that. We shall ensure that a copy of the webinar, which is a YouTube link, reaches you. And we would also be putting out this YouTube, the video of this webinar soon on our Twitter handle. And again, you can see excerpts of the webinar, I promise, on Monday morning when markets will open. Okay, Mark, where do you think gold is headed in the short term? Do you think it has potential to cross $2,000?
Of course, it always had the potential to do that, and particularly now with the amount of liquidity pouring into the global market, yes, gold has the capability of doing that. But I have to warn people that predicting the specific prices from time to time is dangerous. So I would say if you're interested in buying more gold, do dollar cost averaging. You know, buy a little bit now, buy a little bit next month, the month after, stretch it out over a year, and hopefully you'll be able to get a good price along the way at the end of the day. But nobody can specifically predict where gold is going to be going. But there's no question that more and more people are going to be questioning the liquidity, the amount of cash, amount of money piling into the global markets, and wonder whether this excess of liquidity is going to be driving prices in a different direction than we see now.
Okay. Now, China versus India, Mark. Some graphics will again come up on your screen. Now, you are a big investor in China. You've traveled in China. You understand the Chinese economy. 1980s, Mark, belonged to Japan. 1990s really was all about US internet companies. 2000 to 2010 was all about emerging markets. But last 10 years, it's been a combination of America and China. Will China's loss be India's gain?
I think it's quite possible, particularly if Modi's reforms are pushed ahead. And most importantly, companies are allowed to come into India to work to export and produce goods for export. I think India definitely could get on this export bandwagon in a big, big way and produce a lot more than they've been producing up to now. So yes, one of the reasons why we like India is we know that India can be the next China, can be the next big success, global success story. India has a lot more going for it than China because of the political environment in India is much freer. There's a much more open society, and the capability of the population because of that can really produce incredible results. Because at the end of the day, it's all about productivity. And I believe the Indian economy can become much more productive than up to now.
So post, and again, Deep is asking some questions. Deep, thank you for those questions. Please keep them coming. Mark, which part of the world you think, economically speaking, will bounce back the fastest? Will it be China, which has contained the virus? Will it be India, where so far medical news is great, but on the fiscal side, we have limited ability? Or will it be all about innovation? Because when you have to come back from a crisis, you need innovation and you need true blue capitalism. And that is what US government is doing. They're stimulating the economy. They're innovating everywhere. And again, they are behaving like a true capitalist where they've not even locked down the country when they have the highest number of cases.
Yeah, I think India has a very good chance. China is in a difficult situation because, of course, they're putting people back to work, and they're beginning to spike the economy again with productive capacity. But because of the difficulties with the U.S., I don't think they were able to retain the kind of market in the U.S. that they've had previously. And this, of course, is an opportunity for India to come into play. The other interesting thing about the situation in India versus China is because of the English capability of industries in India. They are able to grasp the U.S. market and global market much faster than the Chinese. If, and that's a big if, they're able to boost the productive capacity of the export markets. And of course, this means that India's got to allow more companies, and by the way, including Chinese companies, to come into India to produce. Because remember, a lot of these Chinese companies, despite what the government may want, they want to produce in places where they can export to the US and to these other areas, and places where their labor costs are going to be lower. So India has got the challenge to provide an environment to allow these companies to come in.
Okay. I'm going to again, Mark, the way we are planning this webinar is that we're switching topics and then we're taking questions related to that topics. We've discussed gold. Now we move to India and China. So one more follow-up question on India and China is that China, in a sense, has been the factory of the world. From clothes to baby diapers, from telephones to antennas, they've just been making everything and anything at a cheap price. What happens to the Chinese manufacturing facilities now? And if China slows down, which it would, could metal prices and inflation, both are connected here, could those things remain in a long-term bear market?
No, I don't think that would necessarily happen for all commodities. Of course, some commodities, depending on the production, you must remember, just to take oil, for example. Why are oil prices down? One of the reasons, of course, is that the U.S. suddenly became the largest producer of oil in the world, which was unheard of 10 years ago. And the reason for that, of course, is productivity at the oil fields during the fracking produce more oil at lower prices. So it depends on each individual commodity, not only the demand, but the supply and the pricing at that level. Nevertheless, even if China reduces its production of a lot of these commodity-based products, this will be taken up, and it already is being taken up by Vietnam, Bangladesh, India, Turkey, all these other countries around the world will be producing more and more and replacing China. Now, by the way, this is something that is not necessarily unplanned for by the Chinese. The Chinese realize that they cannot continue to compete on the labor cost front and are moving and have been moving into higher tech kind of products, higher input products, higher value-added products. So I don't think commodities will, in the whole, will be coming down longer term. I think you'll see some of these commodities coming back up as a result of continuing demand.
Okay, so 2 follow-up questions, Mark, on commodities. Where do you think crude finally will settle? What is the real range for crude?
I think you probably see it back to 40 before too long. I think the rates that we saw recently just too low and cannot be sustained because the demand for crude continues to rise. By the way, despite the moves to get rid of fossil fuels, the demand for oil will continue to rise, and supply will be limited at the price that we're talking about now. So I think probably 40 is, I'm betting on 40. So that's just a bet, but I think eventually the price will come back.
Okay, we are moving the last lap of this webinar. I mean, we have time till 5:15, so another 10 minutes to go. So Mark, if you have to invest in one commodity for next 1 year or next 3 years, and just one commodity, I mean, someone's going to limit appetite either to buy oil or gold or some other commodity, which is one commodity you're bullish on?
I probably have to pick gold. Gold would be the one. Despite the rise in price, I think if you look at all the other commodities, gold looks the most attractive. There are some other things that some of the special minerals related to the production of various kind of semiconductors and that sort of thing would be interesting. As you know, I've been a big fan of palladium for a long time, but I think gold is the place to be.
Okay. So Mark, tell us about your experience of investing in India. Over the years you've invested in India.
I've had terrific experience investing in India for a number of reasons. One, of course, we've made some money in India over the years, but more importantly, I've learned a lot in traveling around India and listening to the very intelligent managers that you meet in India. These managers, again, because of their capability in English, are able to access information and ideas globally, and particularly from Europe and the US. So you've got a very sophisticated group of managers around India, and I've learned an awful lot from them and continue to learn from them.
If you have to make a dream team, like in India, we say a cricket dream team full of international players and international legends, how many Indian stocks in your dream team of 11 would be there?
The number of stocks I would have with 11, I would say probably 5. Indian stocks would be in that dream team.
How many Indian stocks currently do you own? Do you own more than 5 stocks?
No, because we have a very limited portfolio. We only have 26 stocks in our portfolio globally. So in India, we have 3.
What is stopping you to make it to 5? Because you already said in the dream team you'll buy 5.
If we may get there, you never can tell.
What is one thing you'll never buy in India? I mean, what is one thing you think that in India, it never works? How attractive it may be? Like, if you bought into PSU stocks some years ago, irrespective of how cheap they are, they've never made money.
Yeah, I think what you've got to look at, first of all, return on capital employed. This is very, very important. In other words, it's a measure of how much the company is making in terms of the capital that is employed. That's, I would say, the critical measure. Now, after that, then you have to ask the question, is the company paying dividends? Because if a company is not paying dividends, it tells you a few things. One, they don't have the money to pay dividends. And 2, they may not care very much about shareholders. So that's another thing that we have to look at. And of course, longer term earnings per share growth is critical. We've got to have companies that are growing. And finally, and most importantly, particularly at this time, companies that have low debt. In fact, a number of the companies that we own have absolutely no debt. They have more cash in their balance sheet. That's critical, and we like companies that in that position. So those are the companies that we have to focus on.
I'm getting a specific question from Beju Desai. What is your view on specialty chemical given crude prices are lower? And that's one space where in general investors have made money.
I can't talk about the individual company, but I can say that specialty chemicals would do quite well given raw materials coming down. But you must remember, when you talk about specialty chemicals, a value-added component is incredible. It's very, very important. The raw materials usually are a small percent of the total cost. So if the company is good. So at the end of the day, you've got to look at the capability, the technical capability of the company rather than the raw material cost.
The 3 stocks which you own, Mark, are they part of Nifty 50 or are they mid or small cap stocks, and which sectors do they represent?
They're in mid and small cap stocks.
What is your view on,
for the most part?
Okay, what is your view on Indian private banks, considering that stocks like HDFC Bank currently are on everyone's lip and everyone thinks that that's the Cinderella which nobody wants to miss?
It's an interesting question because now, previous to this COVID crisis, we were not very excited about the banks or the financial sector. But now, with the pouring of money into these economies and the access the banks will have to liquidity, some of the banks may begin to look quite interesting because they will have the liquidity to really reduce the risk of their bad portfolio. So still, I think you have to be very cautious with banks.
Okay, I'm getting lots of questions. And Mark, just a couple of follow-up questions. I know you're in Munich right now and it's perhaps lunchtime for you, so I don't want to keep you away from your lunch for long. Mark, what is your view on real estate? Given that work from home will increase, we had the management of TCS on ET now yesterday, and they said the following, that by 2025, we would move 75% of our workforce to home. So do you think both locally and globally, when I say locally in India and also everywhere in the world, because work from home will increase, commercial real estate prices could take off?
They already have, as you know. There's been quite a knock on real estate prices globally. And I think that will probably continue for a while. And again, this could be an opportunity to pick up real estate companies that have a very good portfolio. In other words, land that is in central areas, land that is prime real estate. These companies should, in the long term, do quite well. But again, I emphasize you've got to go to companies that have low debt, that are not harnessed with a lot of debt.
Mark, what is your view on global internet companies? I mean, before COVID crisis also, the word FANG, which is Facebook, Amazon, Alphabet, and Google, they were talk of the town. So it's not that the internet companies which we know are benefiting are cheap. So if the world is migrating towards digital, should one continue to buy into these popular stocks like Amazon, Facebook, and Alphabet?
Yes, I think you've got to continue to focus on these companies because they're the leaders and they will continue to be the leaders. And they will, by the way, benefit a lot from the development of the cloud. By the way, one of the things you've got to consider is downstream. In other words, don't only consider the Amazons, the Googles and those companies, but also the companies that serve that industry. So, for example, semiconductors, memory chips are going to be more and more important going forward. The demand for cloud services is going through the roof. And companies, either software companies or hardware companies that service those areas should do well going forward.
If Mark has to go short on a stock or a theme or a sector, where do you think there is a disaster in making because of the scenario, because of valuations, or because of the way world will change?
Well, as you know, this travel industry is in deep trouble, whether it be an airline, travel agent, hotels, etc. So again, there will be survivors. There's no question about that. But you've got to be very leery of any company with debt in those industries. So I would stay away from any companies that are in deep debt unless they're so-called too big to fail and the government is going to come to bail them out. But even in that case, you've got to be very careful.
Would you buy airline stocks or travel stocks if you have a 3-year time frame?
If the airline stock had very, very little debt or no debt, yes, I would buy them. But I doubt if you can find many in that situation. If you do, yes, by all means, because these will be the consolidators. They will be able to purchase bankrupt competitors, and they'll be able to expand after the crisis is over.
Now, I know the answer, but people want to know that is it true or is this legendary that Mark Mobius had a private plane and the tail number of the plane was named on your initials?
Yes, that is true.
So you actually had a private plane, Mark, in which you would fly and go around in the world investing. How convenient was that?
Well, it was mine. It was the company's private plane. It was the Franklin Templeton plane, but they asked me to name it, and I named it N. N, of course, is the prefix for a North American plane, N328MM. I used 328 because at that time I was in Hong Kong, and 328 in Cantonese is pronounced with the words which indicate you will become rich. Sang Yi Bat is the pronunciation. So it was 328MM, which of course are my initials. So it's true.
Okay, so final question now that, there's a little bit of glow also. My question is that people want to know that what's the secret formula or the secret sauce that Mark Mobius always looks the same? 30 years ago, look at a picture from Mark Mobius. He's still wearing designer suits, still the same hairstyle, still manages to surprise everyone. What's the secret sauce behind this health? Behind the healthy life?
Well, I wish that was the case. I've been looking at some of the old pictures that I definitely look different. But I think one of the secrets is to be optimistic, number one. Don't let things get you down. And number two, exercise every day. Don't forget exercise is very, very important. And of course, in my later years now, I've been watching my diet a lot more carefully.
What is one thing you would like to change about yourself, your life, or your decisions, Mark?
Well, first of all, I would like to be able to live longer. I'm pretty old now in terms of chronological age, so I definitely want to live till I'm 110, 120, 130. That's one thing which would be great because we're living in such exciting times. Things are happening at such a pace that it's quite incredible. And I want to be able to experience that going forward. And the other thing is I would be able to keep an active lifestyle. It's very, very important.
Okay. Mark, final question, Indian food or Indian stocks? If you have to choose one thing, what would you choose?
Both.
Well, Mark,
I would like to have my naan and dal plus good Indian stocks.
Well, Mark, it's always a pleasure interacting with you. Always, your optimism is infectious. And, every time I interact with you, I've been criticized that, look, boss, when Nikunj and Mark interact, we get two big bulls on the screen. So I think that's what is happening. So always a pleasure interacting with you, and stay safe, Mark, and hope to see you very soon.
Thank you very much. Appreciate your time. Thank you.